business confidence, the RMB BER Business Confidence Index, has slipped further by 1 point to 39 in the third quarter. This is 3 points below the long-term average level of 42 and implies that just over 60% of respondents are dissatisfied with prevailing business conditions. RMB says this points to an economy that is muddling through, and to address this, structural weaknesses need to be addressed. These include speeding up economic reforms in the logistics, water and local government sectors, alongside coherent messaging across public and private sectors. Joining us for greater detail on the data and what it suggests for businesses and the economy moving forward is Keabetswe Mojapelo, macroeconomist at RMB. Keabetswe, thanks so much for your time this afternoon. So we are seeing a drastic change in confidence levels when comparing last year and this year. And I'd like to get your sense of whether we're in a period of normalization, considering that last year morale was fueled by optimism that was fueled by the national election.
If you look at global trends, South Africa is not really alone in this normalization of business or consumer confidence decline. We had that optimism around, GNU and, new dispensation really in our political arena. And what we see now is reality really beginning to bite. We have global and local factors to factor in. I mean, global tariffs, trade tariffs. Locally, we've had a bit of bouts in terms of political instability, or rather inability to even pass a budget that bit that confidence at the beginning of the year. But what you're seeing right now, especially what has been driving the confidence index this quarter, it's that 30% US tariffs on SA exports. This survey was done during the period when that was announced. And a lot of what you're seeing in terms of our confidence right now is really baking that in.
And, my next question was going to be around that sense of reality sinking in with big business now moving from, the optimism around the national election and actually looking at whether the GNU can implement these structural reforms that we've been talking about. I mean, you look at these figures, you look at GDP, you look at unemployment, really, really downbeat.
Yeah, I mean,
we seem to have lost you again. There seems to be a problem with Keabetswe's sound. Let's try that again, Keabetswe.
Oh, is it much better?
Yes,
Sorry about
yes.
that. Yeah. So if you look at the respondents that we had and the comments that they furnished to us, some of the highlights, or rather the structural challenges they face as business, including high electricity costs, administrative burdens. But what you just mentioned as well, they do still highlight the structural hindrances around logistics. And also now they've highlighted municipal service delivery failures. You can already see that they're facing other hurdles outside of just what we see on a bigger picture, which would be around tariffs, right? Which is what is really taking up the headline. But them talking about corruption and red tape, this is stuff that they commented on as being difficult in terms of making it difficult for them to run their businesses and really have this conducive business environment. That would be, sorry.
I must say, sorry to interrupt you there. I must say I was really surprised by the uptick in morale when it comes to building contractors, right? Really up 11 points to 46, yes, below the 50-point neutral mark, but a big jump. What's boosting optimism on that front?
Yeah, I mean, if you look at building contractors, it's mostly non-residential building, right?
Okay.
We're seeing a lot of back to work. That is definitely building up of that demand on that side. But when you look at the residential side is still on the low end. And that speaks to the demand side as well from a residential perspective. We've had interest rates which were quite high for some time. Yes, we have these interest rate cuts, but are they enough to induce that demand back in the market?
Yes.
And at the moment, with with residential contractors still feeling that pessimism, clearly we're not seeing a return to the residential market that we would want to really prop up this confidence amongst all contractors.
All right. And then sticking with those sectors, confidence related to consumption seems to be dipping, with wholesale and retail traders less optimistic. Does this speak to consumers, households being under pressure, even as we've seen low inflation and those rates coming through, lower rates, that is?
No, you make a good point. We've had this low inflation. We've had interest rate cuts. Of course, that provides relief.
Yeah.
We've seen it in lower debt service costs for households. But then let's look also what's been propelling retail or spending, especially from a household perspective, two-pot. We saw that second round of it in the April. And we also saw subsequently with retail numbers. They propped up, they increased, leading to more withdrawals of the two-pot. But then that's beginning to fade. We always expected that it's not going to be a permanent boost to income that will then lead to higher retail. What we have seen is you're seeing this fading impact of two-pot even in the second round, and it's now being reflected by not just wholesalers, it's reflected by retailers who are saying, well, high-income consumers are beginning to show up, and high-income consumers tend to have better access to credit, which interest rate cuts are helping. And you see it as well, it's furniture retails. Those are durable goods. So you have more confidence amongst the higher earners than the lower earners who would have really relied more on maybe a two-pot to prop up some of their income,
It's interesting to see those dynamics in terms of, the levels at which consumers are at and the money they actually have that they can spend and throw into the economy. I want to talk about the manufacturing sector. That sector really hard hit for most part of the year. You spoke about tariffs at the top. Are we seeing that tariff story playing out in the optimism, or rather less optimism, the pessimism playing out in that sector? And is it just that tariff story, or are we also seeing slowing local demand in the manufacturing sector?
Yes, look, it's both sides.
Okay.
Let's start domestic. On the domestic side, we're already seeing lower retail numbers, lower wholesale numbers. We're seeing on the building contractors, it's just one group. What it tells you is now, if you think about it, it's more household spending and investment. We've seen investment being depressed for quite some time. We've seen household numbers beginning to come down. And that is going to affect on the demand side locally for manufacturers. And then if you look at your story around global tariffs, of course, what you've seen is cancellation of orders. You've seen also some positives or upsides in terms of front loading. And you saw it with our trade surplus, especially the previous month, that showed really kind of the narrative. What you saw in those numbers is a bit of front loading involved there. But it's an uncertainty thing. How long will this persist? Yeah. So it's very difficult to be able to plan around this kind of dynamics in your sector. And you can see this is what the manufacturers are really telling us, that there's just too much uncertainty, there's cancellations, there's front loading. Do you increase production? Do you decrease production because you're not sure? Locally, do we see more interest rate cuts? Do we see more demand? So it's a very uncertain period for them, and they're really now expressing it through this pessimistic outlook.
Yeah, uncertainty really the name of the game, Keabetswe. All right, we'll have to leave it there. Thank you so much for your time and just unpacking that business confidence index for us this afternoon. That was Keabetswe Mojapelo, macroeconomist at RMB.